CPI printed negative. Core CPI was flat. The market got exactly what it wanted, and the S&P 500 gained barely 1/3%. If you're new here, hit subscribe. The free weekly market note is linked in the description. No paywall. Let me show you what actually happened Tuesday. Headline CPI fell 0.4% month over month in June. The expectation was for a 0.2% gain. Core CPI was flat, 0%, versus an expected 0.2% increase. Year over year, headline CPI dropped from 4.2% to 3.5%, and core fell to 2.6%. That is about as close to a perfect inflation print as this market could have hoped for. July rate hike expectations collapsed to the low teens. The dollar weakened. Gold ripped 1.6% to $4,063. Bitcoin added 3.8%, and the S&P 500 closed up 0.38%. The Nasdaq did better, up 0.9%, and the Dow finished flat, because IBM fell 25%. That divergence tells you everything. Semiconductors caught a serious bid. NVDA bounced 4%. Micron added 5%, SanDisk 5%, ASML nearly 3%. Cybersecurity names exploded. CrowdStrike up 12%. Scallier 7%. Palo Alto Networks nearly 7%. Why? IBM's CFO warned on the earnings call that AI-powered cyber attacks are accelerating faster than enterprise defense budgets can handle, and businesses are redirecting spending from traditional software into security and AI infrastructure. IBM's stock cratered 25% on that call. ServiceNow fell nearly 6%. Adobe 4%. Salesforce 2%. The rotation out of legacy software and into chips and cybersecurity was loud. But the S&P 500's candle was a doji, a tiny body with wicks on both sides, closing at 7,543, just 37 points above the upper channel and 77 points, or 1%, below the all-time high at 7,620. When the most bullish CPI print in months produces a doji at the highs, that is not strength. That is hesitation. Now the charts that matter for your Wednesday. Chart 1, NVDA. Monday we told you 260 years was the line into CPI. Tuesday, NVDA opened at 208, dropped to $203.80 intraday, then staged a V-shaped recovery all the way back to close at $211.80. That is a long lower wick candle. Bulls defended the zone. The 203 level held twice now. Monday at 203s, Tuesday at $203.80. That is a double bottom. And crucially, NVDA closed above the midterm trend at 206.47, the line we highlighted Monday. The next target is the upper channel at 219 $. But here's the thing, 212.55 is only the first poke above the July 10th high of $211. The first test of resistance after a pullback is rarely the one that holds. If you're long from lower, trail your stop. If you're flat, don't chase $212. Wait for NVDA to pull back and test the midterm line near 206 as support. A hold there with volume is your entry. A break puts the long-term trend at $197 back in play. Chart 2, CRWD. CrowdStrike jumped 12% on Tuesday, a near Marubozu candle. Open near the low, close near the high, barely any upper wick. Volume doubled to 12 million shares. The IBM AI-attack warning ignited the entire cybersecurity complex, and CRWD led the charge. But look at where price closed, $210.23. The upper channel sits at $178. Let me say that again. Price is 18% above the upper band. The short-term line has crossed above the upper channel entirely. That is a parabolic extension, not a healthy breakout. The stock opened at $191, which means there is a gap from $188 to $191 that hasn't been filled, If you chased CRWD at 210, you are chasing a stock that is statistically one of the most overbought names in the entire market right now. The cybersecurity theme is real, and the IBM warning is a legitimate catalyst, but you do not buy a 12% Marubozu 18% above the channel. You wait. The first pullback to the $191-$195 zone, that gap and the short-term line near $189.50 is where you start probing. Until then, this is a watchlist stock, not a buy. Here's the Wednesday playbook. 8:30 a.m. EAT, June PPI. After a CPI print this soft, the market now expects PPI to confirm the disinflation narrative. If PPI comes in hot, all of Tuesday's relief is at risk. 10:00 a.m. EAT, Fed Chair Warsh testifies before the Senate. This is the main event. CPI just gave him cover to sound dovish. If he takes it, we could test 7,600. If he downplays the CPI print and cites Hormuz-driven energy inflation or sticky services, this market gives back Tuesday's gains fast. After the bell, ASML reports, and Thursday brings TSMC. The semiconductor sector is not going to wait for those numbers quietly. Risk board. The Hormuz blockade is now in its first full day. Any military escalation sends oil spiking and stocks tumbling. IBM's 25% crash is a warning shot across the bow of every legacy software company. Don't try to catch that knife. And remember, the S&P 500 printed a doji 1% from the all-time high after the best inflation data in months. That is a market that needs proof, not hope. Don't chase CRWD. Wait for NVDA to come to you. And don't be afraid to sit on cash tomorrow morning. Cash is a position, especially when the Fed chair is speaking at 10 a.m., and the most important inflation follow-up is dropping 90 minutes before that. Trade the setup in front of you, don't predict. Wait for the tape to tell you what it's doing. Protect what you have. Trade safe.